Yes, let's talk about the strategy. Okay, one of the easiest ways to go about trading the Nasdaq 100 futures and making profit. Okay, this has allowed me to become a consistent and profitable trader. But you have to understand that market structure is I'm not gonna say holy grail, but it is the key that unlocks everything. You have to be able to read the market. A lot of people, they get frustrated. They have a hard time trading because they don't understand how to trade the correct way. Meaning they don't know how to read the market. I don't care what strategy you have. It's not going to allow you to be consistently profitable. You may get lucky and have winning streaks, but then you're going to have big losing streaks because you are not following or trading or understanding the direction of what the market is trying to do or what it is currently doing. Reading structure, okay? Understanding structure of the market. So the easiest way of how I go about trading, and it doesn't matter what market, okay, because I use one simple strategy, trading supply and demand. But right now we're going to talk about the Nasdaq 100 futures in reference to. So I'm going to show you a couple trades, locations where I took trades today. I posted one so far over on the Discord community, and I'm going to go in more detail about these trades for our private community members, those that are and support my efforts as a content creator, those that are elite members. I will be covering a video today talking about the trades and breaking them down in detail. So if you're not a elite member, you may want to subscribe and maybe, possibly become an elite member. How do you do so? Look down in the description portion of the video. You'll see a link that says become an elite member. Click on that. 2 tiers will pop up. Make sure you choose the second tier that's is titled Elite Channel Supporter or Elite Channel Member for $6.99 a month. Okay, that's all it is. A very fractional, minimal amount or fee for a lot of information. So, because basically what I did is I handpicked a series of videos, okay, that are public. Yes, they are, but I've handpicked the ones that I feel like cover the important information, the most I guess the important information or imperative information surrounding the strategy and how I trade, and those topics that I feel like really stand out, okay? As well as you get the trade breakdowns, okay? That's where I go into detail about the trades. I'm not just talking about, hey, this is the area of the zone I traded from, and that's it. No, I go into detail, leading you up through the mindset, talking about what I'm thinking about or why I took that trade, okay? And also where to place your stop at, profit targets, things of that nature. So that you get an understanding of why I took that trade, because it's all supply and demand. You just got to understand. You have to really open your eyes and see. Now, you may trade a little different than I do, and that's fine. If you got something that's working for you and consistent for you, stick with that. Bottom line, okay? I'm not here to hold anyone's hand. I'm just here to share with you my experience and how I trade, okay? That's it. However you trade if it works for you. But we do have successful people that are part of the community that have spent time and educate themselves, okay? Because I'm not an educator. I don't hold anyone's hand. I just simply provide content surrounding and discussing topics about what I find that work for me and have been working for me, okay? So, again, we do have people who are successful by through watching the video content here. And all those that everyone who is a elite member, I thank you for supporting my efforts as a content creator, and me giving and providing the trade breakdowns, providing the video playlist, and the little other small perks you get and rewards you receive by supporting the efforts of me as a content creator by becoming an elite member. I thank each and every one of you for doing so. All right. Now I want to go ahead and jump into today's video. So let's, without further ado, go ahead and do so. So what we can see right now is the market has been moving to the downside. We're now breaking structure to the upside, okay? So, we are reversing pretty much now because we're breaking minor areas of structure to the upside. We just took out this high right here, this major high up to the upside right here above 551 or 552 area. So what could possibly be happening? I would at this opportunity, at this time now, be looking for opportunities to go long. To be honest with you, we just had a break of structure here where it took out this area high right here. We had a low, this high right here, and then it made a lower low, and then it's running back to the upside and did so all into yesterday's trading session, moving higher to the upside. And now we got this major structure. We got the structural break here to the upside. As it was pushing up, it was taking out these minor areas of structure, or what I like to classify as internal structure within this swing here, and then it came up and took out this area here. So there is opportunity back here. This is you can see now a demand area. right here, okay, where the market broke to the upside here. So it could come back, pull back to this area here, and we could look for something to possibly happen there or down here. So we can mark this zone just as well. But you have to pay close attention to price action, because if we start to fold back and start to take out some of these smaller areas, you have to pay attention to price action the moment that it when it starts retracing back. Okay, so because it can retrace back to this area here, this area right here as well. So pay attention, or it can pull lower, it can retrace lower. So we just need to pay close attention to what's going on. So as we can see right now, the market is approaching a round number, and you can see it's rejecting that so far. So I'm trying to pay close attention to see how it's going to react at the closure of this next candle. In a sense, I mean, it's pushed up, but it hasn't really. Let me take a look here. I'm really taking a look to see what it's going to do here. All right, so I'm short here on this entry. I'm looking to take it back down to possibly the 50 area. So I may need to bring this up just a slight bit here. But I am looking for it to run a little lower, hopefully. As you can see here on the 12 range chart, that is breaking structure to the downside. So this was a pullback to an area of small area of supply resting right here on the 12 range chart. So this was a rejection off of the higher time frame. I need to give myself a little bit more room because the area was actually right here on the pullback right here. I got in the trade a little late, as you can see here, so it could test this area up here. Okay, so I'm waiting to see what is it going to do here. And so I'm late on the trade, and this is what happens when you kind of take a get into the trade a little late, because the trade should have been right here on the rejection to this pullback to the small area of supply right here. When it broke and closed lower, I should have gotten to the trade with my stop resting back here. So getting to the trade around at 81.25 with the stop resting back here at 87.5 or so, and give yourself a little bit of room there, because they love to come back and test right at tick to tick or a few ticks above an area. So hopefully we continue running to the downside here. Again, this is a rejection pretty much off that round number there. It wasn't a key area of supply. And I was just looking at the rejection that's taking place. So again, they can come back and test this area. So I need to be careful here. I'm talking about right above 87.75 here. All right. And looking at my higher base chart, looking for it to come down to this area down here to fill in these imbalances that we see on this push to the upside, where we have this aggressive buying to the upside. The market has to fill in every area where there's a gap at or imbalance at, not immediately, but it has to at some point. So keep that in mind. All right. So I just want to kind of capture this trade before we go on to talking about, the easiest way to actually trade the Nasdaq 100, specifically, how I do so using a simple strategy. All right, so again, the stop would have been right back here. I'm looking for it to run lower here. I'm probably gonna bring my stop down some now that we are currently and still moving to the downside here. So I'm gonna let this trade here kind of play out. It's taking a little bit of time to move through, but let's see. We'll see what unfolds here. Okay, it's going to pull back, test these areas here before it probably continue wanting to push lower here. So, all right. So we'll see what happens here. Okay. All right. But this was a rejection off of pretty much a round number, and you just have to find a good entry point to get in. And I like to look for when the market's breaking structure and creates pretty much an area of supply, and then take the trade on the pullback on the lower time frame or lower base chart, not time frame, because I don't trade time based charts. But hopefully this continues running to the downside here. Okay, come on. All right. Let's keep moving. Come on. All right, so we're moving now. The market can test this area here, so I might bring my stop right here. But again, it could test this area right here, and we'll see what happens. But if you're looking at your falling price action and looking at your charts, the market is more likely want to test this area down here around 50, the half number there. So we're getting close to it, as you can see. And just gonna hold the trade. Oh, I'm into this thing with 4 contracts. Oh my gracious! Okay, I must have clicked on it twice. All right, let me adjust my. I didn't even notice that. I know it could stop me right here, and this is where you have to make a decision to either take profit or try to hold the trade through. What I'm probably going to do is bring my stop back right here, because I'm pretty sure that it's going to run to the downside. And if it doesn't, then I just took, it's just going to stop me out. And what could take place is, a lot of people always have this is a tough decision for a lot of people. Should they go ahead and take out profit? People always ask this question here, and what happens is they allow the trade to come back against them, meaning not just stopping, just getting stopped out at break even or locking in some profit. They'll allow the market to keep running back against them, and I talked about this in the video. If you are into a trade and you want to minimize, let's say your stop was up here, okay, where I talked about right here, 87.5, and then the market, if you don't, take profit and then it comes back to break even, you don't close the trade at break even. Me personally, I don't let my trades go past 2 points past my break even point. If I'm, into profit, I'll go ahead and close the trade out. And a lot of times it does happen, where the market will then turn around and move back in your direction. But you just have to chop it up and move on. You just can't sit there and beat yourself up about it and say, oh, came back against me, stopped me out, and then it ran 20 points in my direction. There's always another trade around the corner. Trust that. Okay. So let's see what happens. Come on. All right, so we've tested this area now, so I'm going to move my stop down right there. It could test this area right here now. Okay. All right. Come on. Come on, come on, come on. Where's it at? 55. I think it's going to come a little lower. I may close out. Okay, here we go. All right, I'm closing out. All right, I'm going ahead and get out. All right, because it came down. You see it hit right there, 51. It may push a little lower though. It can come down here and test this area right here around 47 or 48. So I went ahead and got out the trade. Beautiful trade setup. Again, that was rejection off of the round number as it approached it, and then looking for the a structural break to the downside, and this a pullback to some key area of supply, which would have been right here for me, and then my stop would have been the back end at the top here at 87 and a half or whatever. I got into the trade a little late, okay. So I should have gotten to the trade right here at 81 and a half at the break and close of the candle, and it runs down there, okay. And again, I just mentioned it can test this area here, and it can still come down a little bit further, but be careful because we're right at that 50 half number. All right. So let's talk about now the strategy when I'm talking about an easy way of trading the Nasdaq 100 without any indicators. Okay. And before I do so, I just want to say, I mentioned this area down here, this demand area. I just talked about that prior to taking that trade going short. This was a demand area. We had broke through this area right here, the structure sitting above here at 594, 595. We broke to the upside. Okay. So this was a key area of demand that not only took out above this area structure here, the structural high at 553. Okay, but it also took out, we came up here and ran these areas over here above 996, I believe. All right, so I mentioned market pulls back there, look for something to happen. All right, so I didn't take that trade there because I was just in that short. I was eyeballing it, but just decided to stand down. But I knew it was probably going to reject that zone there and push to the upside and break and run the high there, and that it did. All right, so let's talk about now. This was a trade that I took today. It was an area of demand on a pullback, And the reason why, of course, you've got to know by now, the market's breaking structure to the upside. You can see it. So if we're breaking structure to the upside, okay, then you have to, think, okay, can I find an area to get into the trade to go long, right? So as it was breaking to the upside, it started pulling back here. Okay, so we got this bearish movement to the downside, and we have these. This is a minor area structure right there. You got to be able to see things like that as well as right here. So as it was moving to the upside here, we got a pullback to an area of demand right here. Now, the reason why, okay, you could say, you're probably asking, well, it tested that area already. Yes, it did, but there was an imbalance also, which was untested inside the zone. It never tested it. So remember what I said, the market has to come back and fill these areas with this imbalance is resting in, okay? So even though it came back to the demand zone right here, aggressive buying to the upside, okay, this is a zone that aided in the structural or a minor area structure break above here at 418 or 419. Pushed up, but then it came back and filled that imbalance within that zone. So I was paying close attention to see if it was going to reject that area. And I was also paying attention to, which a lot of people, I'm sure, who are experienced traders, they know as well to pay attention to candle movements, the candlestick, to see, okay, are we getting rejection or not? So when I saw that the market pull back and tap this area of imbalance resting inside the zone, and then I saw the closure of this bearish candle to the upside, and then the next candle that closed, it didn't close below that candle, but turned to the upside and closed above the body of the bearish candle there. I started to gain interest and possibly looking for an opportunity to go long as well. But I was looking for rejection over on my higher base chart. My lower base chart as well. The key to how I trade is marking a zone off of a higher base chart. I'm not taking my trades off of my 60 range chart or whatever higher base chart that you may trade from. And I don't trade time based charts or ticker volume. I strictly trade range based charts. But the key to it is marking, first and foremost, step one, marking the chart marking the zone off out on a higher base chart. Okay, again, we're not taking a trade from the higher base chart. The next part is moving down. All right, moving down. But before I do so, I want to see, am I getting any kind of means of rejection off of the higher base chart? Meaning that I just mentioned the bearish candle there, and then we got the closure with a bullish candle to the upside. So we're showing some bullish momentum to the upside. The next part is to move down to the lower base chart to see if we can minimize and get into more of a precise entry point by taking a trade from a lower base chart. Again, we're not taking a trade from a higher base chart. But before I also do so, I also need to, I size up the market before I get into the trade to determine where can I get, where should I be getting out at, or at least at a minimal area where I need to take profit at, without the market kind of reacting and coming back against me. So this is why I was aiming for that area right there. Okay. All right. Rejection here, looking for it to come up and test this area here. And again, I'm going to go into more detail about, if you're an elite member, my mindset, what I was thinking as the market retraces back to this zone here. But moving down to the lower base chart, okay, so we're at a demand zone. All right, that's all this is trading supply and demand. Okay, you got a breakable area minor structure right there, pulls back to demand, move down to the lower base chart to see if there's going to be any means of aggressive buying to where there's a breaker structure to the upside and then a pullback. Okay, so it's just a matter of looking for, a break above an area and then a pullback to a key area of demand. That's all it is. And once you get that, the market pulls back to a key area of demand on the lower base chart, then you look for rejection, confirmation, break, close of the candle, boom, go long. So again, you're aiming for back up there to that 95 area right here. And you have to understand why the market can react right there, okay? And, if you don't, then I'll talk about that to those that are elite members. When I always give the trade breakdowns, I'll talk about that and break them down. So that's why, if you're an elite member, then you'll get access, or you'll have access to the video, as well as, for all those that may want to become a elite member. I think I've already talked about how to become one just by scrolling down to the description portion of the video. You'll see that link there that says become an elite member. But anyways, that's up to you or not. But I will be going through the trade breakdowns today. And so this is just a primary, pullback to a key area of demand. All right. Trading supply and demand. That's all it is. And looking for rejection and confirmation to go long. All right. Based on the zone that I marked up here on this chart off on a lower base chart. Now, this right here, this was a supply zone. Okay, I just want to throw that out there to you. And it could have been taken, if you found rejection. I didn't take it. I had it marked up. I marked zones up, but that doesn't mean I take every single one of them. Okay, because you gotta pay close attention to price action. I knew when it got here that it could bounce right here. Okay, simple as that. All right. So I size up the market to see, even though it was at 400 back down here to 371, it's about 30 points right there. So you could have picked up something from that movement there, is what I'm trying to say. So, of course, I've already covered that trade right there. Why? Round number, that's a level there. Round numbers, half numbers. A lot of people don't know about the pivot levels that I like to trade. It's like 40 and 70. The market can react at those zones. Okay, and they can bounce from them. So you have to understand what could take place. So you saw that trade in the video here. Okay, that was a live trade that I took while recording this video. But anyways, and so that was a rejection right there, back down to the downside. This is a demand area. You have to understand that, and understand that that the market can come back down and test this area. But you got to understand too, below us is that half number 50, 600, and there's 50 right below us. So the market reacted right there, pushed back up, and then it came back down and tested this area demand and broke structure to the upside. Simple as that. This is reading the market, understanding the probabilities and possibilities of what it can definitely do. This here, okay, let's talk about it. Just briefly, you've got to understand and see it. I'm not going to break it down. I'm going to go these type trades that I will go into detail over for the elite members, that ones that have and will have access to the elite membership videos, the trade breakdowns. I'll talk about this in a video post that I will do today, but I'm just showing you an easy way of going about and how to trade the Nasdaq 100 simply by marking up higher base zones off of your higher base chart and then moving down to a lower base chart to get into a trade. Multi-chart confluence, okay? The more confluence that you have in trading, the more, or the better, I should say better, the higher probability that the trade will work out more so in your favor. I just want to say this too. This is just a little bit of advice. If you're into a trade and it's a winning trade and then the market comes back against you, trading is the hardest thing to explain because you can't tell someone where to get in, where to get out. You can show them what you do, but you can't be there right in front of them to tell them where to get in it. You have to be able to understand the best points to get in, because if you don't get in, this is the purpose of using lower base charts to pinpoint, to get into more precise entry points. Stop trading from higher base charts unless you got the capital to do so, because the market is going to railroad you. I promise you it will. And all you're going to do is become frustrated at yourself or someone else, because everybody likes to point fingers, and get frustrated because you see people making money, okay, and maybe becoming profitable, and maybe you're not profitable. You're up, you're down, you're up, you're down, because you're not taking trades at the best zone locations. So if the market comes back against you, and especially if it's blown past your break-even point, get out the trade, because that means that you didn't get into the trade at a good enough entry point. Unless you had the money, the capital to weather that storm for the turn back around, it's going to stop you out, and then it's going to take money from you. Trading is all about probability. It's all about precise entry points of where you get to the trade at. Looking and getting into better trade setups is what's going to help you. If you get into the trade right, the market's going to move. I'm not saying it's not going to have any kind of push and pull, because the market, if it's moving to the downside and you're looking to go short, okay, it's going to have its pullbacks. Push lower, break a low, pull back, break a low before it gets to the point of target. You have to understand that it's going to do that. And that's the purpose of the reason why I talk about positioning your stop. If we're moving to the downside, at the last lower high, moving to the upside at the last higher low. Okay, as it's in that way, you can lock in profit as the market is either moving to the downside or to the upside. But telling someone exactly where to get in at, that's the problem that most traders have, is because they get into a trade way too early or they get into it way too late. All right. So, but if you get into it too late, then the market pulls back against you, blows past your break even, and then you get frustrated because then it goes in your direction. If you get into it too early, what happens? Well, then if you get into the trade way too early, then the market's still searching for areas or levels above, if we're looking at an opportunity to go short, to move or react at to go short. So all you became is liquidity. Guys, you have to be able to see this stuff. You have to be able to have better judgment when it comes to areas in which to take your trades from. You have to be able to read the market correctly, okay? So let's move on. This setup right here, simply point blank, was just no more than a demand zone. I mean, gracious, you should be able to see this. What happened right here? Well, look, this right here was a movement to the downside. The market was pulling back, or was breaking higher, not pulling back, was breaking higher, breaking structure to the upside. Okay, and then when it pushed up right here, what did it do? You got to see this. It broke structure right here. This internal area of structure right here. Okay, these minor areas of structure right here that the market was, as it was moving higher, this area right here pushed up, pulled back, broke higher, broke above this zone right, or broke above this area of structure right here. That was a structure break. Okay, so all this is right here is demand resting down here at the bottom. Aggressive buying. That's all demand is. Aggressive buying to the upside. It gets down here. You wait for it to react at. Okay, again, we're looking here. Look what happens here. The market comes back to the zone right here. Yes, there's another imbalance resting inside of the zone. You see that right there. You wait for confirmation. So now this was a tricky situation because you can see here, this right here, there was really no body to the candle, right? All right, but the market closed above. So, you know, I'm not taking the trade based on the higher base chart to get into a trade. I am paying close attention to, and most traders do, candle reactions when the market gets back to a level or a zone. But you move down to your lower base chart here. So right here, I'm going to go ahead and mark this on all zones. All charts. It was a demand area because it broke structure to the upside, pulling back to a key area demand right here. All right, so let's move down to, what is this, a 952, and look, see what happened. So then here we are. This is the zone. It taps into it. I'm looking for bullish momentum to the upside. It breaks up here, break structure going up to the upside, pull back, look for a key area of demand, break and close of the candle, go long. Simple as that. That's all. So that's all we're doing when we're talking about, you know, using multi-charts or using chart confluence, meaning using a higher base chart and a lower base chart to get into a trade. Never from the higher base chart, unless you choose from a higher base chart. That's fine with you if you're a swing trader, a position trader. I'm just showing you how I do it, okay? And using the lower base chart, most people scale down. The reason why is because it gets them into a better entry point, okay? That's what it's all about. Getting into a good entry point to where the market is not going to have a lot of range movement in between, okay? A big candle on a larger chart could be 40, 50 points, okay? Just depending. So scaling down gets you into more of a precise entry point, but it's part of the strategy and what I look for. This was a demand area of demand. So then I look for an area of demand on my, or setup overall on my lower base chart. Structure break, boom, key area demand on the 12 range, break and close, I'm going long. Simple as that. So I just want to show you and let you know that here's the easiest way that I found in my own personal trading that has allowed me to trade, you know, especially the indices when it comes to trading futures, okay? Specifically, I'm showing you here on the Nasdaq 100. All right, I don't need indicators to do so. This is pure, raw, looking at market structure and pure price action. That's all it is. But I appreciate each and every one of you that tune in each day to watch the videos. You know, those that are part of either our Discord community or part of or a subscriber here on the YouTube channel. If you're not a current subscriber, you know, go ahead and subscribe. You know, there's a lot of good, valuable content here on the channel. I'm sure a lot of it you're probably looking for or scouring the net when it comes to trading futures, and I've covered most of it. But I go into detail most times about the strategy and how I trade. So if you're looking for an effective strategy that actually works, but you know, you have to really pay close attention to the market, understand price action, and the most important, understand and know how to read market structure. Okay, I'm telling you right now, I'm telling you, please do yourself a favor, not me. Learn, educate yourself on market structure because it's going to be the difference of you succeeding or failing. If you do not know or have a hard time reading the market, you're not going to make it in this business. It's going to be point blank. Okay, so if you're not a current subscriber, please take the time to go ahead and sub by clicking on the subscribe button. Make sure to turn on all your post notifications so you're always notified when I post a video. And for all those that are elite members, thank you for supporting my efforts as a content creator. I will be dropping a video and posting one sometime today, going into detail about the trades that I took today, more in detail, and as well as if you're not a current elite member, you want to become one just for $6.99 a month. That link is down in the description portion of the video, okay? Or you can click on the join tab or button you see right here, and the same thing will happen. Two tiers will pop up. just make sure you choose the one that says Elite Channel Supporter, okay, to gain access to the trade breakdowns, video playlists, and the small other perks or rewards that you do receive. But outside of that, guys, I appreciate each and every one of you tuning in. If you found value, please drop a like on the video. Take care. See you in the next one.